Hey everyone, hope you're having a wonderful week. So, I know that there has been a lot of chatter and a lot of posts about the new Hometown Heroes program from Ron DeSantis here in the state of Florida. So, wanted to kind of take a little bit of a look at a few of the things that's currently applicable with this program. So, the first of all, you do have to be what they're considered to be a hometown hero. And I'll go ahead and I'll put the link to the document down in the comments. There's about 50 or so professions. You do have to pull your license or certification with the state. You have to be active and current, in that line of work with those certain types of employers. And then you also, of course, do have to be a first-time buyer. So a little bit more about this program is it is a 5% silent second mortgage that is not forgivable. It never goes away. So what that means is you purchase this home and, 5 years from now, you want to refinance it because interest rates are back in the threes or in the fours. Guess what? You got to pay that 5% back, every single penny of it. Also, if you ever decide that, hey, this was our first home, obviously as a first time buyer, and now we're ready to step up, but we want to gain wealth and we want to keep this home as a rental property. Uh-oh, got to pay that money back. So that's another thing that you have to keep in mind is that money does have to be paid back. You cannot refinance without paying it back. You cannot convert your home into a rental property. It has to be homesteaded as your primary residence, and you can't sell it. Otherwise, you have to pay that money back. So it's also not $25,000. It's 5% up to $25,000. So if you're doing the FHA program, the county loan limit, tops that 5% out at about $21,000 if you're the absolute max of the FHA county loan limit. Obviously with conventional, or VA, it could go higher, could go to the conforming county loan limit, which does get you, to that $25,000. So, there's some good things about it. There's some not so good things about it. There is an income limit, which in Duval County, the income limit for the household is $118,950. So, you do want to keep in mind that this is something that's not for everybody. It's not for someone that used to be in the medical field and now it's not. The way that the job requirements look that I can tell is that private school teachers won't be able to get this program either. But the biggest thing that concerns me about it is the fact that this money is not forgiven. So it's not like some of the other programs like the FHA Advantage or the AFR Advantage, where it's either a grant or is forgiven after 36 on-time payments are made. So this is something to where that at this point in time and for the foreseeable future, definitely by the time that the 100 million runs out, the people that are going to be getting this mortgage are going to be getting in the highest interest rates that we've seen since 2007. So whenever something goes up, most of the time it does go down. So every expert that's out there when it comes to interest rates knows that the market is cyclical. And historically speaking, it tells us once interest rates peak, that about 18 to 24 months later, they're going to come down to within 20% of where they started. So if you use this program, you're going to kind of have a tough choice here in about 2 years. You're going to have the choice of, do I pay this money back to drop my interest rate dramatically? Or am I going to be stuck with, this higher interest rate on this loan that I have now? So I'm a big believer in education and honesty. So my guess is there's probably not a lot of people that are going around saying, hey, here's this program, here's the pros, here's the cons. And I say that because over the past 2 years, I've had many people that have done the bond program and other down payment assistance programs that are not forgivable, or that have clauses that you can't refinance or you have to pay that money back, reach out about refinancing and come to find out, oh, I have to pay this $7,500 or 10 grand or however much it was back. Nobody told me. My loan officer didn't tell me. My real estate agent didn't tell me. And now they're upset, and now they're on social media, they're on Google, and they're giving you 1-star reviews because you didn't educate them. So I think it's very important with programs like this that you look at both sides of it. Also, we're still obviously in a heavily competitive market, and it's far and few between that we see homes that are not going above asking price. Sellers don't really pay closing costs, and most of the time sellers want to know that if the appraisal comes in short, that you've got money to pay above that. So a program like this where it's going to take longer to close, definitely not a 21-day closing. Good luck on a 30-day closing. In my experience with doing any of the Florida Housing Finance Authority bond programs, 45 days is about right for those, give or take. So there are definitely some pros to it. It's going to help some people that don't have any money, that aren't going to be able to get in a home unless they use something like this, and they're not trying to go after homes that are fresh on the market where there's a ton of competition, and they're okay to get something that's been kind of stale and that's been on the market for a while. So if you're going to use this program, you have to understand what it is. You have to understand that you're not going to get the house that's been on the market for less than a week. You're not going to get the house where people are going above and beyond the listing price. And then you need to understand that this payment that you're getting, this interest rate that you're getting, that as long as you have this house, that's what you've got. That you're not going to refinance unless that you're paying this money out. And if your plan is to live in this house a year or two or whatever, and then rent it out, turn it into Airbnb, this is not for you. Otherwise, again, you have to pay that money back. And I mean, people can try to lie and get around it. But I mean, all it takes is US Bank, which is the servicer on all these, to run a quick report or look at the fact that your mailing address is now not the same as their property address, and boom, they see it's no longer homesteaded, and all of a sudden you get a bill for up to $25,000 in the mail. So it's important that you understand the risk involved with this. There are other down payment assistance programs. One of the ones that we have, the FHA Advantage program, which is a 5% down payment assistance. It's forgivable after 36 months. There's no first-time buyer requirement on it. There's no income requirement on it. Now, of course, on all of these type of programs, you're always going to have a higher interest rate and some higher closing costs. So, I mean, there's still no real zero out of pocket, but, it does cover the 3.5% down for FHA, as in addition covers 1.5% towards your closing costs. And again, after 36 on-time payments, that thing is fully forgiven. So there are some other options out there. Personally, what I've seen the past couple of years in the market is not only do you have to have enough money for your down payment and your closing cost, you typically have to have enough money to cover in case the appraisal comes in short. So this might be a program that in a couple of years from now, if it's still something that's being used and something that's still actively being funded, then at that point in time, it might be an amazing program. If you know that you're going to get an interest rate that's low enough to where it doesn't matter and you plan on staying in the house, then awesome. So just wanted to take a minute and kind of, do a little bit of education on some of the facts, some of the pros, some of the cons of this program. If you have any questions, please feel free to reach out to me. Hope you're having an amazing day.